So the beautiful thing about being a business owner is like.
Great. Thanks for watching our video today. We have John here. I'm very excited to have him here.
Thank you.
John, tell us about what your job title is.
So I'm a strategic tax accountant. My position is where I have tax strategies for business owners. Anybody who's self-employed gets paid by a 1099. So my position is to help them implement strategies in their business and their life to reduce their taxes they owe and to keep more green in their jeans.
Great. I don't usually wear jeans. I wear slack. But I mean, green's green. I'll take it.
Green's green, man.
Perfect. Well, let's go into, since what we do is more real estate related,
Okay.
let's go in and talk about that. Let's say I own a house for this situation. What is it that I can write off there, assuming I'm self-employed? What can I write off there on my taxes?
So you'll have a number of individuals who will say, well, hey, you own a home, beautiful. You own business, beautiful. Let's have you have an office in your home. We'll do square footage. We'll write off annually, percentage of your utilities, interest, property taxes. I don't go that route, okay? Because simply, the IRS kind of mandates that space to be used 100% for business. And it's so rare it's used for business. It's kind of a small red flag to the IRS.
Mm-hmm.
They watch it very carefully. They run algorithms to see if, let's see if person XYZ, let's see if their expenses for their home office deduction falls in line or it's outside the line, okay? So, when you're in business for yourself, I prefer to use a different strategy. Like you, okay? When we met, you were paid individually via 1099. Not a lot of tax strategies when you're paid by a 1099, but yet what we did is we formed a corporation for you, right?
That's right.
Okay. Just by making that move right there, we did away with all your self-employment taxes that you were being billed on the net income from your business. Did away, it's gone. Bingo. So that's kind of like a closing, all the money you save. So now what we do is we teach you that, the IRS requires that corporations, whether it be a limited liability company taxed as an S-Corp or a C-Corp taxed as an S-Corp, have their monthly board of director meetings. They require that. Most people forget about that, and so when I meet them, I have to re-educate them, help them understand, guide them through how to do it and why we do it, okay?
Mm-hmm.
Well, now it's a matter of, being that the IRS allows us to rent our principal residence 14 days a year tax-free, let's utilize those two strategies together, the board of director strategy and the rent your house tax-free strategy. So then we can have our client, or you can have a board of director meeting with your spouse at your home, and then you would rent your entire home to your business one day a month, and then your business would pay you a daily rental fee for the home. Some people might be $75, other people might be $200, might be $750. It all depends on the situation, the home, the income, and other small factors as well.
Good deal. And let's talk about a little more about rental properties and what you can do there. So,
Okay.
well, I think we're going to go into depreciation, right? How that works and how that's structured. Let's start there, and then we'll move into the interest and how you can write that off, and,
Okay.
then move forward from there.
So let's do some really quick math, okay? Let's say you're buying, are we going to go a single family home?
Sure.
Okay. Let's say you're buying a single family home for $325, all right? So you can depreciate that home for tax purposes. You can't depreciate the land. So let's just arbitrarily say, the land is worth 50 grand. Let's make math simple. So now we have the taxable value, the depreciable value of the house of $275,000 divided by 27 and a half years is $10,000 per year, okay?
Mm-hmm.
So now when you have a rental property, you are writing off $10,000 a year depreciation. That's a full year depreciation, 12 months. All the interest, the mortgage interest on the property taxes on the property, any repairs and maintenance on the property. So in the end, what really happens, most people end up losing money on paper for tax purposes, but in reality, they're making money every month. Because who's paying the mortgage interest? Well, the tenant is, okay? Who's paying the property taxes? Well, the tenant is, okay? The only item that really comes out of the landlord's pocket is the repairs and maintenance. The depreciation is a free gimme from the IRS. Well, I shouldn't say free gimme, because when you sell the property, then you have depreciation recapture, okay? But that's a different story for a different day. So in the end, every month they're making money in reality, but on paper, on the Schedule E for the tax form, they're losing money, which is a nice benefit. So I've met people who say, John, all my adult life I've paid no taxes because I own many rental properties, and their problem is they're almost appreciated out fully. So for them, they have to either do a 1031 exchange into a larger property, okay?
So I'm gonna
Like for like, debt for debt.
Perfect. Yes, I'm going to stop you there real quick. Not everyone knows what a 1031 exchange is, so I'm going to have John go into that. So John, what is a 1031 exchange?
Sure, I'm sorry, thank you. So a 1031 exchange is where you have a property owner who actually sells a rental property or raw land or commercial property, and they sell it and they exchange it, which means this. So if I've got, let's say a fourplex worth 800 grand, okay? My debt, let's say, is 200 grand on it, all right? So I can do a 1031 through an exchange intermediary, which means the exchange company will like pseudo take title to it, to the property. It'll sell. The funds will be held by the intermediary. There's a 45-day window of time to identify the new property. So like for like, debt for debt, okay? So the price can be higher, but the debt's got to be about the same, 200 grand, okay? So in the end, the money never touches my pocket, never goes, no green in my jeans, okay? But the whole thing is held through an exchange intermediary, so I would give up my fourplex, I would acquire somebody else's 12-unit apartment complex. The gain that I had on the fourplex, let's say it's 400,000, okay, the gain, rolls over to the new property, the 12-plex, and there's no tax consequences until that property is sold, or, I mean, that property could be 1031 again and again and again, so that, let's say, God forbid, it's gonna happen, I'm gonna die someday, all right?
Yeah.
So let's say that 12-plex, when I die, is worth $2.4 million. Well, my heirs would have a step-up basis of $2.4 million. So they could sell it and pay no capital gains on that 12-plex. So that's what a 1031 is, and there's different ways in which this can be done.
Perfect. So long story short, 1031 is rolling over a property to avoid capital gains. Is that right?
Yes.
Perfect.
In a very succinct.
Yeah, right. Nutshell.
Yes.
Yes, we can get. I'm sure you could get a lot more complicated on this. We want to try to keep it simple, for my sake as well as everyone else's. Okay, great. So we went into that, and we talked about the different strategies on what you can deduct from your taxes. I want to talk a little bit about the principle of it all. You know.
Okay. Of taxes?
Not necessarily of taxes, but of how to reduce the amount that you're paying in taxes, right?
Okay.
I think you and we talked about it briefly, not to get too political, but we talked about like Donald Trump, how he's not paying a whole lot in taxes. I mean, we can see that with Amazon, and there's a lot of debate on both sides.
That's a beautiful one, right? Amazon? I mean, shoot.
Yeah, and there's a lot of debate on both sides of it. But ultimately, I want to boil it down. I think I want to ask everyone is like, well, do you want to pay more for taxes? I mean, I'd personally rather have my money in my pocket. I feel like I can contribute more back to my community, whether it's through donations or whether it's through activities that we're doing or whether it's giving back to schools or helping develop. I mean, there's a million different things that can be done, and some people might dislike this comment, but honestly, I think I trust individuals a little more than I trust the government.
Okay.
Which, again, we can go into that, and that can be very debated. But ultimately, I want to talk about the principle of why I think it makes sense to learn how the game is played, and then go out and play where it's going to be to your best benefit. In real estate, for example, not everyone knows the different things. I'm very passionate. I talk a lot about house hacking, how you can go in and live in a property. All you have to do is live there for a year for it to be considered your primary residence. and then move the next year, live there a year, so you can get away with buying 5, 6 different houses and paying less than, on average, maybe 4% down on all of those as you go. So otherwise, you have to do 20% down on investment properties. So whether you want to learn how to play the game and be able to leverage your money and work and have it work for you, or you just want to do what everyone else does and just live paycheck to paycheck trying to get along in life, that's your call. But what I do want to go is provide value so you guys know how to go out and play the game to make sure that you're providing the best life for yourself and your family. So let's talk a little bit about that, John.
Sure. I appreciate you calling it a game, because in my world, I've always considered it this way. The IRS is the game master. We're the pawns invited to play. Play the game according to their rules, okay? So my position is this. I have no problem being the pawn. I have no problem playing the game according to their rules. I want to use their rules in my favor to minimize my taxes, okay? I just left a guy today. He pays about $21,000 a year annually in taxes, okay? A number of issues. He has earned too much to qualify for the government subsidized health insurance premium, okay? So he's got to pay it all back. So we want to put things in place, not so much to minimize his income, but to utilize actual real expenses on his behalf as a business owner that others may or may not think about. When I talk about others, I'm talking about other tax preparation companies or firms, okay? When it comes tax time, December, January, February, your mailboxes are going to be flooded with advertisements. Hey, come to us. We'll do your taxes for this. We'll give you, hey, we can even give you a loan on your refund, okay, to help you out. Well, here's the deal. The average person who works for those little companies, the mom and pop little shops, okay, that just pop up in the Walmarts or the Targets, they go to like a 16-week class, okay, and that's all they do. Now I'm not talking, you know, individual CPAs. I'm talking, you know, just these, you know, pop-up shops in the Walmarts, Targets, Smiths, any other type of store that's out there, okay? And they're not the most educated as far as your best interest. They're just trying to do what I call, it's kind of a dunk and slam. Get as many people to come in, get the tax returns done. You're gonna pay them. They're gonna earn money. So the more returns they can do in a short period of time, the more money they earn, and they're not looking out for their customers, really their best interest. Okay. So when it comes to taxes, it's kind of your and my responsibility to learn what we can do to minimize our taxes. Okay. You know, if you're paying a couple $100 every year and getting a sweet deal on having your taxes prepared, that's great, but you're probably going to be paying every year. So when you talk about the Donald Trumps, maybe even some of the Mitt Romneys or the former Ross Perot or other financially well-to-do people, they're actually hiring bright people who have strategies, who have knowledge, skills, and they know what they're doing. So that's why these individuals are paying the least amount they possibly have to. Now, you are no different than those individuals. You have the right and opportunity to pay the least amount possible as well. You just have to find the right type of people. That's what I do for a living. You know, I don't want everybody. I don't need everybody. Okay, I don't really do many clients who are just a W-2 paycheck to paycheck because I really can't help them out too much. But someone like you who's a business owner, I can do a lot of things. All right. So the beautiful thing about being a business owner is, like, here, I'll ask you a question. So what percentage of your car do you use for business? 100%?
Yeah, I'd say at least 90%.
Okay.
Yeah.
All right. So when it comes to a vehicle as a business owner, if you buy a passenger vehicle, a vehicle under 6,000 gross vehicle weight pounds, now we're talking like, you know, a Ford Taurus, a small, mid-size sedan Lexus, Camry, Saturn, even some types of minivans, those are all gonna be under 6,000 pounds. So according to the tax code, you can write off the first year $10,000 depreciation first year plus 8,000 bonus depreciation, or $18,000 the first year, okay, on the car. But let's say, hey man, I'm making bank. I'm making 400 grand. I'm showing high dollar people, high dollar houses. Well, you may want to step it up. You may say, you want to know what? I need a Land Rover, or maybe I need a tricked out Expedition. Now, both of these types of vehicle are going to be over the 6,000 gross vehicle weight pounds. That's the caveat, 6,000 gross vehicle weight pounds. If the vehicle you buy is over that number, then you can write the whole purchase off in the year you acquire it. You could have bought that vehicle on Christmas Eve or December 31st, and you can write the whole value of the vehicle off against your business income, okay? Now, that can have the potentiality of, well, let's put it this way, okay? If you're in the 24% tax bracket, okay, a 60 grand vehicle, dude, you've just wiped out, what, $15,000 in potential taxes owed on that money, okay? It's going to reduce your taxable income. It's going to lower your tax bracket. So that's a great way to go for that purposes, is our vehicle purchases. Now, and I doubt very seriously your spouse is going to be upset that you come home on Christmas Eve with a nice tricked out event. I mean, they're going to love it. But yet it's for your business, not for them.
Of course. Yeah. Real quick, I just saw a video with Grant Cardone.
Oh, I love Grant Cardone. He's wonderful.
Yeah. I have mixed feelings on a lot of his philosophies, but again, he plays the game and he plays it extremely well. He did a video. For those who don't know, he has a jet, and it's a pretty big, really nice jet. So he said that it was coming to the end of the year, and he said, "Hey, I've got all this money I need to pay in taxes. I can either go out and do a bunch of marketing that it maybe isn't necessary and it doesn't fit what I'm looking for my business. I could go out and make this big donation." But I mean, I think Grant Cardone cares about himself, and he likes to take care of himself, which is good. So he's like, "Hey, well, what can I do that's going to be for my business? I travel a lot," and he decided to buy a jet. And the jet, the way it was all set up, it was a full tax write-off for his business, and it played out beautifully for him. And it's just knowing. It's knowing. I try to associate myself with people who are smarter than me in a lot of aspects. Hence, I'm here with John. And I'm always asking different agents. I'm always asking different lenders. I'm always asking a lot of questions to try to find the best way to provide value for my clients, for example. And again, just going into like for like, in the real estate transaction, you see a lot of the same thing that we see for taxes. You see, hey, we'll do one-time fee, chip, chap, quick. All we want to do is create the numbers. And honestly, I use John as my accountant, and although he charges me more, he saves me a lot more than what he charges me.
See, that's the distinction right there, okay? Is when you use someone like with me with my skills, yeah, my fee is going to be a bit higher. But guess what? You're going to receive more back in multiples of tax savings than you would have received using somebody else. One of my new beautiful things I try and get my clients to tap into, and we need to talk about this, but if you're at that high income level, you're making too much money, well, gee, you could utilize someone, like for example, I have a financial advisor, and with me, we've opened up a solo 401k, okay? So with my solo 401k, my business will pay me, and then off what they pay me is going to be a contribution to my solo 401k. So for retirement purposes, I'm benefiting, and who pays it? My business on my behalf. It's a beautiful way to go. Because there's only so many strategies out there, and sometimes we have to look outside the box on alternative ways to do it. And like you, that's where I go to people who are a bit smarter than me in a different realm, a financial realm, because they've got great ideas that can benefit me and I can pass on to my clients. Not that I receive any financial remuneration from it, but I can refer my client to them, so I come across as the hero because the people I know. And that's what life's all about. You know, you with your connections, it's all about who do you know who can help somebody, right? There's a phrase out there, lift where you stand. So if we can lift other people out of their financial disparity, their financial despair, because they're involved in owing 20 grand of taxes every single. This guy left today. He owed taxes from 15, 16, 17, and for 18. He is spending $2,000 a month paying to the IRS to get current.
For interest or just
No.
to?
Just what he owes.
Okay.
Now, there's going to be a factor of interest there as well, okay? But that's $24,000 a year. So his problem is that every year, John, I owe 21 grand. I'm paying 24 annually. I owe 21. I'm only coming out of the game 3,000 ahead when you look at it. So today, what do? We talked about a few strategies. I hooked him up with a financial, in fact, ironically, the financial person who I used contacted him, and the advisor gave him my number, and now I can help him too. So, you know, that's where we all kind of come together as one to help each other.
100%. I really couldn't agree more. Again, this is a little bit about real estate, and this is my perspective of things, and I hope it translates as valuable to whoever's watching this. But life boils down to this, and you're going to see some agents who are moaning and groaning about Zillow and where that's going, or Realtor, or Homey, or Flat, or whatever all these companies are doing. You know, for me, I'm all for a free market. You know, if you're not providing enough value to your clients, then you need to do one of two things. One, you need to lower your prices, or two, find a way to provide more value. And if your value is not outweighing how much your client is paying them, then you're doing them a disservice.
Mm-hmm.
So as the consumer, you need to be watching out for that. You need to be watching out and see you're getting something that's going to be most valuable for you, and then strategizing it and working with the professionals so you can find out what's going to be the best result for you in the end. And again, I really appreciate what your thoughts are there, and it is lift where we stand. We all find a way to help and collaborate to help each other. Another thing, I know we're talking about, taxes, and I don't want to stray away too much from that, but I think you and I agree a lot on the basic thing that we need to be free, and we need to be free either from the government or from debt or from whatever it is. There's so much student debt out there. I have a client who has more than $100,000 in student debt,
Right.
and they're making $50,000-$60,000 a year.
Yeah, but that means they can barely pay.
Exactly, that they can barely pay
Right.
the interest on it, and they can't qualify to buy anything that they actually need because now they owe all their money to the government.
So I got a story about that. Can I share it with you?
Yeah, of course.
Okay, great. So I have this client, Michelle. Michelle's a dog breeder, okay? And when I first met Michelle and her husband, they have 7 kids, all right?
Not just dog breeders.
No,
I'm just
yeah,
teasing.
yeah, they're breeders, right? They have 7 kids, and so she breeds these dogs. Well, she started breeding these dogs because they were broke. I mean, broke. Husband owed $70,000 in student loans. Because he's only making about 50 grand a year with 7 kids, he was postponed having to pay it back. No penalties, okay? So after, she goes, John, I gotta get a bigger house. I gotta get a bigger house, John. I need more land. I've got 30 puppies in my garage that I'm trying to take care of with my 7 kids, watching them. I'm watching 7 kids, taking care of puppies. I gotta buy a bigger house. I go, Michelle, please, 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 hold off a year. Please, hold off 1 year, okay? And so she listened to me. Well, a year later, I get a phone call. She goes, John, the most fabulous thing happened. I go, what? She goes, I just wrote a single check to pay off the $70,000 on the student loans. I go, Michelle, what happened? She goes, well, my dogs are breeding. And when I've got 30 dogs and I'm selling the dogs for $3 grand a piece, that's 90 grand.
Oh, yeah.
So when she's got $135,000 in a checking account, and she's got 25 more puppies that are going to go out, and she's got 3 more litters coming. You see, it's the small little decisions that we make. And most times, it behooves us if we go out and get some qualified advice and counsel from somebody. And now I'm not saying, oh, John's wonderful because she listened. But if she wouldn't have listened to me, well, first off, she couldn't qualify for a house. She had no money. Okay? So she paid off the debt. She bought a beautiful 4,000 square foot house in Eagle Mountain on an acre of land. Is now building a big building for the dogs to breed and to raise them. Okay? So she can build her business. But again, it's a matter of, we have to stop and look where we're at and see where we want to be and put things in place to get there. And a lot of times, it's as simple as talk to a qualified person who knows what they're talking about. Yeah, you may have to pay for it a little bit, but the fee you pay is well worth the benefit you're going to receive.
Yes, I couldn't agree more. And I don't want to take too much more time. I know I value the folks who are watching. I value your time, and I don't want to be here just bantering. I'm speaking for myself. I appreciate everything that you've gone over. But what are some of your maybe last little tips and tricks of take home for self-employed folks who are like our audience is partially that, and it's partially folks who are investing in real estate, and whether it's your second, third, fourth, fifth, 20th property, the point is real estate investing is now part of your business, and it's something that you're doing there, so it makes sense to find out the best ways to structure it to go over that. So what are some of your tips and tricks after creating a little more dialogue on what our audience is?
Okay, all right. So as a property owner, things you can possibly do is you could, in advance, you could prepay some of your expenses on your rentals, okay? You could cut a check and pay in advance your property taxes, your property insurance. You could proactively go in and do a rehab on a project on a property that maybe you can wait 2, 3, 4, 5 more years, but by doing it ahead of time, you're going to incur the expense now because most of you, are cash basis taxpayer. When you get the money, it's income. When you spend the money or incur the expense, when you spend the money, it's an expense. Okay, so you can do that. Now, if you can also prepay your auto insurance. You can prepay your health insurance. I've had clients. Okay, last year, a gentleman calls me up. He owns a construction company. He's a Payson area, and he goes, "John, I need some strategies. What am I going to do?" And I go, "Well, I see according to your prior year's tax returns, you give quite a bit of cash to a charity." He goes, "Yeah, I just do. I feel good about that." Well, wonderful. I would counsel you to double the amount that you give. You've already given this much towards December of last year. I want you to now double that amount. Pay in advance. And he did. And he goes, "John, my business has doubled this year because," and I believe it's because he did that. So you can make contributions ahead of time now. You could buy a new vehicle if your business needs it. If you don't need it, you can buy a new vehicle. Okay. You could go ahead and maybe get some advanced training through some courses to acquire more properties creatively. So those are kind of a few things that could possibly be done.
Definitely. No, I agree 100%. And I think if I had to say an underlining takeaway from our conversation has been talk to somebody who you trust, who you believe is an expert, tell them what you're looking for, what you want to do, and then create a strategy to go out and do exactly that, right? I think my strategy for investing is a little different than other folks'. So for me personally, depending on where you're at as far as income brackets, I don't think I'm going to be buying a new car, mostly because I have zero emotionally. I have zero attachments to cars or vehicles or fancy things. So excuse me if you're into fancy things. I have zero attachment. It's me.
You've now offended half the population.
Probably have, right? I live well beneath my means. and then I can be ultra aggressive on how I choose to invest.
Right.
And then I honestly, if all my investments die out, like it really doesn't hurt me that much because I've learned to live so small
Right.
that it's not detrimental. Although obviously that wouldn't be ideal.
Well, you've planned ahead, right?
Yeah. So everything's set up. But bottom line is, hey, what are your goals? Talk to someone who's qualified to be an advisor in those goals. And then not just one person. Honestly, I'd recommend talking to other people.
2, 3.
Yeah, even talking to 2 or 3 different accountants.
Yeah, definitely.
You, John, don't be offended, but you're
No.
one of the only accountant I've talked to.
Oh.
For other folks out there, honestly, if you're looking to buy a house or get into investing, I recommend talking to multiple people out there. For a couple reasons. One is you might find one who you vibe with better and you think is going to be more beneficial to you. And 2, honestly, you can go in and see what value they are providing. And if they're not providing the value that you need, then, I mean, go ahead and work with somebody else. I'm all for a free market, and whatever provides more value to the consumer is what we should be doing and what we should be providing. So, honestly, although there are a lot of different tax strategies,
Mhm.
and we could talk about this, I'm sure you could talk about this for hours. The bottom line is talk to someone who knows what they are, get linked up with them, and then go over your situation specifically to find out what is the best setup. Is there anything you'd want to add to that, John?
I would recommend that when you're meeting with other accountants, that you would ask them to potentially review your prior year's tax return and to give you some ideas, not that you're going to steal the ideas, but a few alternative ways in which they could potentially help you reduce your taxes on the road.
Yeah.
I always do that. I mean, I'm always having people call me, text me, email me. I got this problem. Can you help me? Sure, I can help you. And I always say, now, I haven't met these people once in my life. Before I can tell you if I can help you, I need to see a copy of your prior year's tax return, your business and personal. That gives me the picture of what I need to be able to say, okay, fine, I can do this, 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 and this. Okay. Without that, I'm just like, I don't know what I can do.
100%. And that's same with me. And I don't want to go back and rehash it because it's not about me trying to position myself, but it is about what's most valuable to the folks who are watching. It is that. Honestly, I want us to give a lot of strategies and things that people can glean off of. Honestly, for me, I'm happy to sit down with anyone who wants to talk about their strategy, and I do it for free. Let's go ahead and sit down, see what your setup is, see what we can do to help you out. And then if you decide to work with me, then cheers. If not, then that time is just, I chalk it up as the price of doing business. That's what it is to me.
It is.
And then you see what it is that we can provide value. But ultimately, I think it is that. It is working with experts to find what's going to be the best setup and the best strategy for you as an individual to take you and your family where they need to go.
I agree.
So I appreciate your time, John. Is there any last little remarks that you'd like to share before we let you get going?
Have a fabulous Christmas and take time to plan, because if you don't plan, then you plan to fail.
Yeah, fail to plan, you plan to fail. I couldn't agree more. Well, I appreciate you guys tuning in and watching this. Hopefully it's been a benefit on some of the strategy sides, but also on some mindset sides that I think is equally important to make sure that you're planning for your future and setting yourself up in the best situation possible. Thanks again, and if you guys ever have any questions, I respond to all the DMs and the comments. I respond to all those personally. And if you guys would like John's information, I'm happy to pass that on to you, so you guys can go in and find out what the best setup is for you. Thanks again, and I hope you have an awesome holiday. We're rolling right around into it. By the time we have this video out, it'll probably be mid-December, so that's very appropriate. Thanks again, John.
Thank you. Appreciate your time.
All right, perfect.